Hello, everybody, and welcome to today's webinar, Putting Your Business Plan into Practice. It's the second part of a two-part series, and our instructor today is Vic Berniclaw. And this is a COVID-19 sponsored webinar, so I want to show this slide. This is a slide with the most up-to-date and current information related to employers and COVID-19. The first link is for the New Mexico Department of Health. The second is for New Mexico Safe Certified program. Excuse me 1 second while that alarm beeps. Okay, I'm sorry about that, everybody. The next link is for OSHA's Guide on Preparing Workplaces for COVID-19. Then we have the CDC's COVID-19 information. The most important, in my opinion, is what you should know about the COVID-19, the ADA, the Rehabilitation Act, and other EEO laws if you are an employer. And then the New Mexico COVID-19 business resources from newmexico.gov. Next, I want to go over some webinar ground rules with everyone. You are muted right now because we're on a webinar. And if we allow you to speak, please make sure, be cognizant of your background noise. Make sure your Zoom ratio is fit to window. And if you have a question, please put it in the Q&A, and that's at the bottom of your screen in the black ribbon. In fact, just to make sure everybody on the call right now knows how to use the Q&A, can you type a hi, hello, how are you into the Q&A for me, please? Hi, Jessica. Now, don't be shy, everybody else. Okay. Hi, Anwar. Nice seeing you here. And hi, Mark. Okay, that's good enough for me. Thank you, guys. If there's anything that goes wrong with the webinar while I'm on, please raise your hand for me. Like if you can't hear or see us, and I will check and see what's going on with you. I'll probably chat with you privately. And then next slide, please. I just want to update you on some future webinars. If you want to sign up for a webinar, go to our website at nmsbdc.org. And some upcoming webinars we have, let me see, we have Peggy McDonough coming up tomorrow, and she's going to talk to us about the tax implications of the Employee Retention Tax Credit and EIDL and PPP. Then we have Listening to Your Business on Monday, and the Intentional Entrepreneur is also Monday. And then you don't want to miss 3 social media mistakes that will sink your business webinar on September 21st. And without further ado, I'll turn it over to our instructor, Vic Berniclaw.
Good afternoon, everybody. Can everybody hear me? If you can't, be sure you register, as was mentioned. What we want to talk about today is the implementing the Lean Business Canvas. If you remember, we were talking about a business model canvas, which I'll show you in a minute, that we went through the 13 blocks and explain all of the things about planning for your business. Well, it's great to do the planning, but you have to do other things. You have to make sure that you've completed the plan as we detailed, and here's that plan that we talked about. And if you had the time, because it's very, very important that you work your way through these 13 blocks. Remember, the most important blocks is in the upper left, and that is you have to have a problem that you're going to solve. In other words, the customer is the key, and the customer's aspect that is the key is his cash. You live and die on that cash. So you have to get that cash from the customer. How do you get the cash from the customer? You provide them a solution to their problem. So the upper left, you have to define what is the customer's problem in real detail and really, really understand it. And you work your way from the solution through the customer, through all of these steps. And then the other really important one, in addition, obviously the funding ones in the lower left, is what the success factor is in the lower right. What do you really want out of your business? Do you want to make a lot of money? Do you want to make sure you have a job? Do you want to have a business that you can pass on to your kids? Is it you want to do something good for the community? Whatever it is, wonderful. Any of those or any others are just fine. Keep that in mind and then see how you're progressing toward that success factor. Have that goal line in mind, just like a football team has a goal line that they're striving toward. You need to have a goal line that you're striving toward. So what we do is you've filled out that operational plan, and then you say, okay, what else do I need to do besides having that plan? Well, we have to implement that plan. One of the things you have to do is there's a lot of administrative things that need to be done. Things like, for example, a company name. Well, a company name can go all over the place. We're going to talk about organizational types, whether you want to be an LLC, a subchapter S, a sole proprietor, whatever. We're going to talk about those. We're going to talk about business administration in all of its aspects, whether this is HR, human resources, whether it's keeping your books, whether it's managing your people, etc. The financial planning and record keeping, very, very important. We're going to be talking about that. We're also going to be talking about taxes, because if you don't pay your taxes, and some people say, well, I'm going to try to skitter around this, you might get away with it in the short run, but you're going to get tabbed, and it's going to really, really hurt, because those people believe in hitting you with fines and with interest. So when you get nabbed, you're going to get nabbed heavy and maybe to the point of getting wiped out. So best to understand the taxes and then go ahead and take care of those. Let's talk about the company name to begin with. A company name could be either general or descriptive. What do you mean by that? Well, it could be general in terms of a name that is not really descriptive. For example, Google. What in the world, if you didn't know what Google was, what is Google? Or Amazon, or some of those, Etsy. What do those things mean? Well, it turns out that they are unique to that organization, but that organization has to spend a lot of money to provide that. So the advantages for a general is that it is theirs and theirs alone. There aren't any other Googles, there aren't any other Etsys. But the disadvantages is that they have to come up with a lot of money to burn that name into your mind. So the first time you heard Google, you might have said, who the dickens is that? Or whatever is Amazon. I thought it was a river in South America. No. So they have to spend the money. So that's a disadvantage. Now, if you want a descriptive name, then it's easy for people to understand. So one of the businesses we started was called Home Security Systems. Well, the reason I selected that name is because it is descriptive and it tells exactly what we do. So the people are like, you know, a Roto-Rooter or a ABC Roofing, whatever it is, those are descriptive names that will tell you exactly what they're doing. The disadvantages that we hit was we went out and did a lot of security systems for a lot of homes. And the people that say, oh, this is great, super, love it. Now come down to my business and do it. Well, nobody wants a sticker on a business that says home security system. So we had to create a second company that we called Industrial and Commercial Security Systems. Again, descriptive, but it was descriptive for a different customer set. So our advantage was immediate recognition of what we did. Our disadvantage is it's fairly narrow. So you may end up, when you go outside of that narrow boundary, creating another company, which is no big deal. And we'll talk about how you organize that. Make sure that no one else is using the name that you want to use. How? You go to the Secretary of State, New Mexico Secretary of State. You go on to the area that used to be covered by the Corporation Commission in terms of the regulatory aspect for businesses. That's where we're going to talk about getting the LLC or limited liability company arrangement. You can go in there and say, I want to call Bluebird Nursery. And they say, there is no such thing as Bluebird Nursery. That's great. Well, then you know that nobody else has got that. You can go ahead and use it. On the other hand, if Bluebird Nursery comes up and says, here's Bluebird Nursery, then you know, hey, I can't use that because somebody else, maybe in a remote village somewhere, has already got that name. That's a way to make sure that you don't run afoul of that. Organizational types, there's a lot of them. Easiest is sole proprietor. Sole proprietor is no more than just using your social security number as your identifier number for tax purposes. unless you have employees. If you have employees or you have, you want to do broader things, we're going to talk about getting an LLC. Sole proprietor, you and the business are one and the same. It turns out you don't have to do anything with regard to organizing in terms of formality. You can just do it, check to make sure nobody's using the name, and just set up your business and go with it. That advantage is simplicity. The disadvantage is that since you and the business are one and the same, if anybody feels they were injured by your business, they not only can sue the business, but they can sue you personally, because you and the business are one and the same. Both of you are in that basket together. So if the judge says, yes, in fact, a judgment is appropriate, that means that they're going to come after your house equity. They're going to come after your car. They're going to come after your 401k retirement, whatever assets you've got, they're going to come after and get those. So partnership is no more than a sole proprietor with multiple partners. When you do a partnership, make sure if you go in a partnership, and it is so easy to get married, but very difficult to get divorced. So what you want to do in a partnership is make sure you have a partnership agreement in writing, both of you sign and notarize as to all of the aspects of the business. How much are you each going to contribute? How much effort are you each going to put in? What happens if A happens or B happens? So for example, in a partnership, the advantage is you split the work and you may find a complementary partner. You're great in operations and they're great in administration or vice versa. Super. Disadvantage is if your partner goes out and creates debts, you are responsible. You say, well, I didn't accept that. No, it doesn't make any difference. The partner and you are one and the same in the business. So if the partner goes out and buys something and defaults on it, you're responsible. So that's a disadvantage of partnership. The thing I mentioned earlier about suing a sole proprietor or a partner from someone that's injured and the judge agrees and here's the default. The way to protect against that is to use something called a limited liability company or LLC. LLC is a business separate from you as an individual. It's easy to get that, and we're going to be talking about how you go to the state and you get that, but that provides you liability protection as long as you make sure that that company is set up and operated totally under that name. So for example, any money that comes into the company needs to go to the LLC. Any money that comes out of the company needs to come out of the LLC. So if you said, I got this LLC, but I need $5 for lunch, and you dip in the till and take $5 out, or wait a minute, the company's a little bit short, I'm going to put $100, I just put $100 in the till. That's what they call piercing the corporate veil. That means, again, that if somebody can show that they can sue you and say, you and the company are one and the same. Therefore, because that piercing corporate veil, I get to sue not only the LLC, but I get to sue you as well. So LLC is not a guarantee of protection of liability, but it is a major form if you treat the company as a separate company. Subchapter S is the next step up. Subchapter S is basically the formation of the law that allowed for this. There was a chapter S and a subchapter S that called this out. Specifically, it allows you the same liability protection that an LLC does, but it allows you to have stock that the LLC doesn't. You have partnership interests in an LLC, but you have stock in an LLC, in a subchapter S, you can actually go out and sell that stock. There are some limitations in terms of number of stockholders, can't have foreign entities in it, and a few things like that, but it allows you to raise money through what's called equity or ownership of your business. So there's some real advantages in a subchapter S. C corporation is what you see in the big companies, you know, the General Electrics and the General Motors and all these people, they're all C corporations. Truly stand, not only they sell stock, but they are under a huge amount of regulation by the Federal Trade Corporation, FTC. They end up with having to really toe the line regulatory wise, but it is a major effort, and they sell stock on the stock market big time. So that's C Corp. If you decide that you want to eventually get to C Corp, and if you are a business that really starts to take off and you have to have what's called venture capital funding, they will insist that you be a C Corp. So, but that's another thing downstream from startups. Okay, let's talk about what you do in New Mexico. Okay, how to form the LLC. You got to come up with your name. We talked about the name already. You have to have a registered agent, but in this case, you can be your own registered agent. A lot of people feel like, wait a minute, I got to have somebody else be my registered agent. That's your choice, but you're going to have to pay somebody to be a registered agent. You can be your own registered agent because what the state wants is they want to have somebody with a physical address, not a post office box, but a physical address that they can reach when they want to reach you with official papers. So that's the purpose of a registered agent. You're going to file articles of organization. The way you do that is you go onto the website for the, and we're going to give that in a little bit, for the State Secretary of State, and you go down to the area for LLCs and you indicate you want to generate an LLC. There is a tutorial that you can also go through, and there's also a YouTube training that you can go through, but it's easy to walk through, and you walk through a whole series of questions, you fill those out, that becomes your articles of organization. So when you get done with applying, you have generated those articles of organization. You can prepare an operating agreement, but that is optional. The operating agreement merely says, how am I going to run the company? So for example, it says, I'm going to have a meeting of the company ownership on such and such a date. The president is going to be so-and-so, and the secretary so-and-so, and treasurer so-and-so, and we're going to be doing business at point X or point Y. And in the event of my demise, if something happened to me, I got run over by a bus or something, the person that's going to step in for me is going to be my spouse, my partner, my friend, whoever. So you indicate in there what would happen to the business in the event of your demise. Formal names. In the formal name, it has to be followed by LLC, LC, L.L.C, or L.L.C. One of those abbreviations. So I have a small consulting business. So mine is Multitech, LLC. So I always put that down. So make sure you do that. The other thing is a little sidelight here. When you sign a document, if you have an LLC, make sure you sign the document as whatever you are, president or whatever it is. Sign the document as Joe Blow, Mary Blow, president, and the name of the company, LLC, because then they know that you, as a representative of the company, are signing it not personally, but for the company. If you just signed it with your name and without any of that descriptive, it could be interpreted that you are doing that personally. That, hey, I'm signing this contract personally, and therefore I'm personally liable. You really don't want that. You want the company to be liable. So always sign it in the name of the company. We talked about making sure that no one else is using your name. We talked about the federal agent. Got to have a federal agent, a registered agent, and somebody who can accept the legal papers. As I mentioned, you can be your own physical, you can be your own registered agent. The articles of organization, obviously, as I mentioned, are filled out in the online. Can't do it writing nowadays. You have to do it online. But it does include the LLC name, the date that you're filing it. For the perpetual, is it perpetual or is it terms of years? You have an option saying, hey, I want this LLC for 5 years, and then I want it to go away because the project's going to be done. But if you're going to be in business, you want to stay in business, then just put it down as perpetual. You can leave the purpose blank if you have a general business purpose. Name and address of your registered agent. We talked about that. You can put your own down, but it has to be a physical address. Excuse me, not a box number. Excuse me. Articles of organization. This is part of that application. You're going to put down your email address, phone number, the principal place of business, whether the LLC is going to be run by a manager or by you as a member. You might have to hire a manager to run it. excuse me, whether you have just one member or partners, and the name and contact information for you as the organizer. Article, as I mentioned, have to be paid online, and you have to pay a filing fee of $50. Typically, people use a credit card. If you say, no, I have to use cash or check, then you're gonna have to make arrangements ahead of time so that when you fill this out, they've got that in hand already. But the easiest thing is just use a credit card. The operating agreement, remember, was optional, not required, but advisable. And I mentioned some of the things that's involved in that in terms of how you're going to run your company. And if you create it, you do not have to file it with the state. All you do is you put it in your own files, because that's your own way you're going to be running your company. In New Mexico, the way, as I mentioned, you go online to the Office of Secretary of State and follow the instructions. There is the access point. Incidentally, you don't have to copy any of these down, because SBDC does a super job, and they'll provide you all of these view graphs. So you'll get them by email, so that you'll have all the information, and including the websites. Business administration. Let's talk about some of the things you need to do. First of all, after you get your LLC, if you go that way, an LLC name, you do not want to do this checking account until you get that LLC. I'll give you a quick illustration. Second company I formed, I went to them with a name, and they said, that's too close to somebody else's. It wasn't, you know, they were doing roofing and I was doing security, but they had roofing in their name and I had security in mine. Didn't make any difference, because the preceding words were, I wanted commercial and industrial security systems. They said, no, there's a commercial industrial roofing. You can't have that. I said, yeah, but you can't have it. I said, okay. So I changed it from for commercial industrial to industrial and commercial. Well, they said, that's okay. Nobody's got that. So who knows? But once you have that, then you can go out and get your checking account, because if you got your checking account with the business name, and then you have to go change your LLC name, you got to go back and change your checking account name, which you don't want to do. So you got your LLC. If you go that way, go get your checking account. You really need the checking account, because the thing I mentioned earlier, every dollar that comes into the company and every dollar that goes out of the company, you ought to run through your checking account. The reason is that shows that you are clearly a business entity. Even if you get cash payments, stick it in the checking account. That could be in a bank, could be in a credit union, any financial institution of your choice. You ought to really think about a website. Too many startups and small businesses do not have a website. And they say, well, it's expensive, it's complicated. You really need it, because people who hear about you want to know, are you a fly by night? Are you an established company? Or, you know, what's your status? And tell me a little bit about the company. They're not going to call you. They're going to go to your website. It's easy to generate a website. There's a number of free templates that will generate a one-page website for you. Just Google it and you'll get them all, and you can grab it one page for free. Now, when you start adding pages and on this, then you're going to have to pay a little bit of money to the template company to help generate your website. But you can do that yourself. You say, hey, that's out of my wheelhouse, and you can get some help generating a website. But think about at least a one-pager simplified that tells what it is that you do. Think about business cards. It makes it professional if you can get some business cards and drop them off with your clients, potential clients. I recommend you consider a trifold. I mean, what a trifold is no more than just a sheet of paper folded 3 times, and you've seen them in racks all over the place that tell a little bit about what your company is, who you are, what you do. Maybe if you could generate in there some recommendations, some endorsements, that'd be fantastic. But it tells a little bit about you. Why do you want a trifold? When you're talking to people and you give them the business cards, it's one of a zillion business cards. And they say, oh yeah, I remember Joe Blow, and they're an ABC company. Now, what the dickens did I talk to him about her? But if you have a trifold, it's a real piece of advertising that they will tend to remember you. So it's something to think about in terms of your advertising program. Insurance. There are a number of forms of insurance in terms of, and we'll talk about that a little bit more later on, of how you have to have some certain insurance and some insurance is optional. There is a product, service, and pricing. We're going to talk about product, service. How do you price things? There's several different options. We're going to talk also about licenses and permits. What licenses do I need or permits? Let's talk a little bit about taxes. You're going to have to register with the federal government for a EIN number, which is an employer identification number. Now, as I mentioned before, if you don't have any employees and you are a sole proprietor, you can get away with just using your social security number, so you don't even have to do this. But if you are an LLC, or if you have at least one employee, you really need an EIN number. So it's probably just as easy right from the beginning to go get an EIN number. The EIN number is the license plate number for you and your business. And all the conversations, all of the communications is all done in that particular number. So the IRS, you can get it easy. You just go to irs.gov, it's free, and you get identifier after you have your business name. The state wants also, they used to have something you may be familiar with, you may have heard something called a CRS number, which was a combined reporting system. They've done away with that as of 1 July, and they now have something called a New Mexico Business Tax Identification Number. So it's a little bit different in the sense that they have set up separate forms for the different taxes that were administered under the CRS. So instead of doing it with one form, they're doing it with a whole bunch of forms. But typically, you'll end up doing, even within that system, you still end up with one form with a typical business. But there's just a lot of atypical businesses that they've put into additional forms. You get that number by going to tax.newmexico.gov, free, and you're all set up. Not only will you get the tax number for your income tax, but also for your gross receipts tax. And that's another whole ballpark, which we'll talk about. Payroll taxes. If you've had a job anywhere, you're familiar with the fact that money's taken out of your pay for Social Security and Medicare. And the owner of the business has to match that. So if you have employees and you take money out for the payroll taxes for the employee, you have to match that as the employer. You'll have to, and we'll talk about sending that off to the state and the feds as a little bit later. It amounts to like 15.3%. So that's split between the two of you, unless you are a self-employed. So if you're self-employed, you have to pay both halves of that. So you have to pay the whole 15.3. So there's nobody, to take it away from. So you're both the employer and the employee. So you end up paying both halves. There is a federal and state unemployment, which you'll have to pay, but there is a whole system for that. It's almost nothing, very, very minor for the feds. The state unemployment varies dependent upon your industry and your record of firing people. So to begin with, you'll pay the full rate, but as you have experience, what's called an experience factor, it'll drop down and drop down and drop down. And it is used to take care of people that claim unemployment against your company. So if you've fired somebody and they can claim that, hey, I need unemployment, and Workforce Solutions ends up saying, yes, in fact, they are eligible, then your account will be dinged for that unemployment to take care of that individual. On the other hand, if that individual quits, they cannot claim unemployment. They could claim it was a toxic environment and I had to quit because of, and oftentimes Workforce Solutions will give them the unemployment. But you have an opportunity to protest that if you want, and even appeal it if you want. Taxes, you have to pay your taxes, the federal income tax, usually a small business at the end of the year. If you made enough money, you were really going pretty good in your business, you may have to pay quarterly tax statements. So for example, I had to send off quarterly tax statement yesterday because it was due 15 September. So 4 of those quarterly. you have to come up with quarterly estimated taxes for the federal and the state income taxes. Otherwise, end of the year, whoever is working with you, whether it's your accountant or CPA, they'll guide you in terms of coming up with those the correct taxes, and it'll be based on their profitability, what kind of profits you had in the business. Gross receipts tax is another ballpark. It specifically, the state says they call it gross receipts, but in reality, it's a sales tax. The reason they don't call it a sales tax is they're saying whether you charge that sales tax, that gross receipts tax, or not, you are on the hook. The person who bought the service or product is not on the hook. You are on the hook for it. So if you want to collect it from the customer, that's up to you. So I've done consulting work where I just charged a flat fee without any taxes. But then I had to turn around and pay the gross receipts tax out of that. Also done things which I would add the tax to, so that not only they pay me the original amount, but also a gross receipts tax, just like you would when you go to the store and buy anything. You always pay a tax on top of it, gross receipts tax. Then you are responsible for remitting that to the state on whatever arrangement you get when you signed up for your business tax identification number. They'll typically say, I want you to report quarterly. And you can say, hey, I'm very little income. I want to report every 6 months. And they may let you pay 6 months, or they may force you into quarterly. But if you make enough money, you get it pretty successful. They're going to say, no, I want that monthly. And if you're really successful, they're going to say, no, I want that weekly. So it depends on the amount of profitability, amount of gross receipts tax that you owe them, because they want that money. That's their money and they want it. And if it's a lot, they want it right away. If it's a small amount, they say it's not worth the paper. So just hang on to it for a little bit longer. We also have local property taxes. I'm sure that if you own any property, your house or whatever, you know that you have to pay property taxes to the county every 6 months. If you have a building or anything like that, you probably have to pay that. If you just lease or rent, you don't have to worry about it. But if you have equipment, they may turn around and say, well, you have $100,000 or $10,000 worth of equipment, therefore you got to pay property taxes. But that's you in the county. The number. The state uses that as I mentioned, as their license plate for dealing with you, and particularly for your gross receipts tax. And you have to have that if you're doing business in New Mexico. And it's paid by the seller, as I mentioned, if not collected. And you get that PTIN right at that number, as I'd mentioned in an earlier slide. The training's available, as I mentioned, both. There is a training for that on YouTube, and they do training periodically as well. So, for example, it's called Taxation and Revenue Department of the state will do training. Now, pre-COVID, they were doing it basically every month, and it was face-to-face. Post-COVID, they're kind of really backed off on that. So you may have to depend on either a training when they schedule it or this YouTube. The EIN number, if you have, just one person, you don't really have to have it by yourself. If you're a sole proprietor, if you're an LLC, you really should have an EIN number, because you're probably going to end up growing the company, and there's no sense in having to undo something and then redo it. So easiest thing I found is just to go ahead and get the LLC. It's free. Correct, the EIN number, it's free. So just go ahead and do it. But if you have employees, you have to have it. There's no choice. And as I mentioned, you get that from irs.gov, no filing. Let's talk a little bit about accounting. Why do you need accounting? You need accounting to keep score. You wouldn't play a football game and not have a scoreboard. You just say, oh, that was a touchdown. Isn't that wonderful? And somebody else scored. Oh, no. You got to have a scoreboard. Well, the same way in a business, you have to have a scoreboard for the business to know where you are. In addition, you have to have it for taxes. Tax information is based on your accounting. Where am I going to get my accounting information? There's a lot of ways of doing it. There's people who throw all their receipts in a shoebox, then give it to an accountant and say, you sort it out. Very expensive for you, because you have to pay for their time to do that sorting. If you can do the sorting first, you're going to save a lot of money. When we were in business, we just got a software, something like QuickBooks, and then just kept all the information and then turned out a disk, turned it over to our accountant, and the accountant then did the taxes based on the information in that disk. You could turn around and say, well, I don't want to afford a software. You can use a spreadsheet, just an Excel spreadsheet, and put all your information down. The benefit of a software is it knows where to put the funds, whether it was a utilities or whether it was a income for sales or refund or whatever. It knows, so it saves a lot of time for you. Something called a chart of accounts. Early on in your business, we did this before we got our first dollar in, right after we got started, sat down with an accountant to create a chart of accounts. What the dickens is a chart of accounts? Chart of accounts is basically the boxes you're going to put the dollars into. So you have a box for revenue. You're going to have a box for expenses. And if you say, well, that's all I'm going to have, just revenue and expenses. Then you say, well, wait a minute, if I ever wanted to go back and figure out how much did my utilities cost? Well, it's already mixed in there, so you can't figure it out. So well, I guess I need a box for utility. Okay, fine. Do I need a utility box for power, P&M? Do I need a box for gas? Do I need a box for water? Or do I lump them all? Those are your decisions. But the more boxes you have, the easier it is to go back and figure out where my money went. It's a little bit like a budget for your household. Instead of just throwing everything in a box, you know where, hey, I spent this much money for food this month, or had to go buy gas or whatever. You'll know. Same way with a chart of accounts. In our case, when we had revenue, we wanted to know how much was for sales, how much was for service, how much was for leasing, because we did some leasing. And within the sales, we wanted to know what kind of product. Was it product A, product B, product C? So we would know whether our sales for these different products was going up or down. So you need to think about what would be the best for you and your business, and then sit down with your accountant. There's revenue and expenses, as I mentioned. And remember, revenue minus expenses is either a profit or a loss. To begin with, most businesses end up with more going out than coming in. Therefore, it's a loss. But what you really want to do is to get to what they call break even, when the revenue and the expenses are even, so that you could start making a profit. Because whatever losses you have to reach in your pocket and make up for. We're going to talk a little bit about how you calculate that. Make sure you have credit card capability. That is, get a merchant account so that you can take credit cards from your customers. If you can't take credit cards, which is people are going more and more to as opposed to cash or checks, you're going to be at a disadvantage. So make sure you can take credit cards in your business, and then you get it with a merchant account through a merchant account service. Here is just a sample of keeping track of things. So for example, we have revenue at the top, operating expenses, and then is it a profit or a loss? In this case, they kept out some additional expenses to come up with what they had, the bottom line or the net income or true profit. So they took in revenue, and in this case, they had both what they sold and what their fees were against that. So here's your gross profit. They took out all of the things in the expense area and subtracted this from that to come up with the operating profit. And then when they took these additional expenses, they come up with the bottom line. Some people lump this interest up into the expense area. Different ways of doing it, but in general, it's revenue, what comes in, minus expenses, what goes out, and do I have a profit or a loss? That's a income statement, or what's called a P&L or profit and loss, and it always covers a period of time. So you can see that these are a period of years. So it's a period of time for income statement. A balance sheet is a snapshot. Balance sheet just says, what do I look like right now? What do I own in the way of assets? What do I owe? Goes out, liabilities. And what's left over is called my shareholder equity. So assets, 472,000 in this case, 100, equals my liabilities plus my equity, 472,100. That's why they call it a balance sheet. The left side has to balance what's on the right side. So put down all the things that I own right now, current assets, or anything that I could get rid of and turn into cash in less than 12 months or less. Short-term, long-term property and equipment, that's long-term assets. And then some other assets, they have intangible assets, things like intellectual property, intangible asset. Less the amortization or accumulated depreciation comes up with the assets. Here are the current liabilities, what you owe to people in 12 months or less. What I owe in long-term debt, which could be, like a mortgage. So there's all of my liabilities. My equity is what's left over between these two numbers, and that was into stock, etc., to come up with a balanced set of numbers. So balance sheet will always balance. It has to by definition. Budgeting. Let's talk about a projected income statement. Just like that income statement we looked at earlier that showed actual, we're going to do the same thing and project it or budget it. You project your revenues and your sales and say, I have no idea what my sales were. Well, what you do, and you're going to estimate. For example, in the first month, I can't sell anything because I'm setting up the business. Second month, I might have a little bit of sales. And you're kind of estimating. And then as you're going along, you're constantly revising these numbers because you have to know what your bottom line is going to be. Is it going to be negative or is it going to be positive? And it's being based, remember, on revenue minus cost to come up with profit or loss. And remember, if it's a loss, I have to dig that out of my pocket. So how do I know how much to dig out of my pocket? Well, the way you do that is take a look at a sample form. And again, this is just a very, very simplified income statement. Here's my revenue, which I've estimated first month 0, and then next month 100, 200, 300, etc. I've got some expenses, and these are all just fake numbers just plugged in here. So in your case, you have to put in your own numbers. Labor, rent, utilities, phone, etc. And I just plug these in here. So at the beginning of the first month, I got nothing coming in. I got 130 going out. So I've got a loss of 130. Next month, I got 100 in. My expenses were 160. So I lost another 60. So the 130 plus the 60 accumulated is 190. Next month, I got 200 in, but my expenses were only 180. Hey, I got to break even where my money coming in and going out is equal or better. That means that in that third month, I made $20 in profit. So my 190 out of pocket then goes to 170 and right on through the process. But you can see that in this case, I had to have the 190 in pocket, in hand before I even started the business. And you want to know that ahead of time, because if you don't have that 190 in hand before you start the business, you're going to start down that track and you're going to run out of money and it'll be a crisis. And likely, like as I mentioned earlier, last webinar, the cash flow is a lot like the blood in your body. If you have a lot of blood in your body, you're just fine. But when you run out of blood, the body dies. Well, the same way in your business, when your business runs out of cash, your business dies because you don't have the money to pay the bills. And if you can't pay the bills, nobody's going to sell you anything. Nobody's going to work for you. And therefore, you're dead. So cash flow is very, very important. There's even a webinar you may have seen on the SBDC listing that's strictly on cash flow. Very, very worthwhile. A guy I know personally, Tommy Thompson, does a beautiful job on cash flow. Very, very important. So, but this is one way with a projected income statement of knowing how much money I'm going to have in hand. The one thing you'll find is that you will overestimate revenues. You'll think a lot more is coming in than it really does. And your expenses, you will be underestimated. You find that, oh my gosh, I forgot something. Therefore, I needed to add it to that. And I should have added because then so the bottom line is bigger. The losses is bigger. So the 190 in this case may need to be 300 or 400 even, before I even start the business. So do that analysis before you start the business and then keep it updated as you're going along to be able to know how things are going, to know how much I have to have in the way of cash in hand before I start the business. Well, where am I going to get this money? Well, one of the places is savings. and friends and family. There is a magazine called Inc. magazine, INC, and it's a magazine for small businesses. They went out and they did a survey of the CEOs, that is owners, of the 500 fastest growing companies a long time ago. And recently, within the last couple months, they did it for the fastest growing 5,000 companies. In every case, when they went to interview the CEOs and they totaled it up, by far, 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 the majority of those CEOs, when asked, where did you get your money to start? They said savings, friends, and family. The reason for that is banks are not interested in loaning you money because you are too high a risk. 80, 90+% of small businesses, depending on which set of data you use, go out of business within 5 years. So you're just too high a risk. Now, once you're in business and you've got money flowing in and it looks like you're successful, you got something going, the banks are interested, but then they're going to want to have collateral. Collateral meaning assets that you'll have to show them from your balance sheet that they could lock up, in a sense, that says that if you go under, I get to go pull those assets out and sell them, so I'm not out that money. But the bottom line here is that savings, friends, and family is the primary source of funds for businesses. Not the only source, but the primary source. There's something people say, well, let's do crowdfunding. Well, crowdfunding is a process that is very, very complicated, and it's available. You can either, that comes in two flavors. One flavor is that people really believe in what you're doing and will virtually give you money. You may give them a t-shirt or a sample or something like that. You may even give them the first product that comes off the line for them to have as a sample of your products that you're going to make. Those are easy to do. You can set it up, but you have to set it up with a crowdfunding organization. And you can Google this and you can get details. I've talked to a lot of people and they say it is not easy to do that because I've talked to someone that says it took them 2 people full-time for about 3 months to get the crowdfunding going. The other thing is, if you set a target, let's just say $50,000, and you only collected 40, some of those organizations say you have to give that 40 back. You can't keep the 40. You got to give it back to the people because you didn't get to the 50. But they also get their fee. So you got to pay that also because of the effort that they went through. So make sure you check with that organization. But in each of these cases, we're going to talk about going to your counselor, your mentor, to make sure that you can do things right. There is the sale of equity. I remember I mentioned subchapter S. You can sell stock in the company. So for example, cousin Willie, I'm going to sell you 10% of the company for $3,000 or whatever. And that's based usually on what's the company worth on a projected basis. What's my profitability going to do for the intermediate term? And then back that out and say, okay, the company's total is going to be worth $100,000. Therefore, 10% of the company is $10,000. So Willie, you can have 10% of the company for $10,000. So you can sell equity under subchapter S. There's a lot of rules, but that's okay. You can do that. So that's an option for you. You can get loans, but usually the loans want collateral. That is some assets. So I said, I want to start my business. I have to maybe go to the bank and get a loan on the equity in my house. We did when we started a business and we needed money for expansion. We got a second loan on our house and put that money into the business. Of course, the business paid us back and we paid that loan off. So those are options for you. Let's put it all together in the remaining few minutes. When you go through this process, thinking about all of this stuff, set up a schedule of all the necessary steps and do them chronologically. That is in time sequential fashion. Who, what, when, and at what cost. And constantly update it. So here's just a simple, just grab a Excel spreadsheet and you can put on there anything you want. But in this particular case, this has got the step, the activity. Who's going to do this? Are you going to do it or is somebody else going to do it? When do you plan on starting it? When's the projected completion date? And when did you actually get done? And what's it going to cost you to get that done? So you'll know what your costs are down here. And then any notes. You could say, hey, number 3 in the sequence is the most important. That's critical. I've got to generate the cash flow analysis. So that may end up being the the first one that's the most critical. I'll do these first two, but that's really the thing that's really super critical. So you could do out in here, you prioritize, however, but be sure you write it down. People say, well, I got it in the back of my head. Well, that's fine, but you don't remember it and you don't think about it. But it turns out the brain functions best through visual neurons in the brain. Where brain was started out with the human beings, not by reading, couldn't read, seeing things, visual. So keep things visual to the maximum extent possible, and you're going to be more effective. Okay, let's talk about a summary here. First of all, remember when I first started out, I said the most critical thing was understanding the customer's problem. You got to have a customer problem and you got to have a solution for that problem, and you're on your way. You don't have a customer problem, you don't have a business, because there's no reason for the customer to buy anything from you if there's no problem. You've got to have a solution, preferably a solution that is a little bit unique. Now you say, well, hey, everybody's in business. I can't be unique. It might be unique in that part of the city. It might be unique because you can deliver it right away. And other businesses say, I can't get you till tomorrow or next week or whatever, but you could do it. You have a 24-hour service for you. That could be unique. Any solution that is unique has got a better chance of hanging on. You have to deliver more value than you get. In other words, the customer is going to pay you, but they're only going to pay you for things that they see of value to them and more valuable to them than keeping those dollars. So always think value that you're going to provide. And if you can keep getting more and more overjoyed customers, turns out, talk to a lot of people, and there's a lot of ways of advertising. But the best way of advertising, people have told me, is word of mouth. People talk to other people just like you talk to a lot of people, and you say, hey, in fact, this morning I was talking to one of my neighbors, and we had some new windows put in. And he said, who put your window in? So I told him, that's an endorsement for that organization. I said, they did a fantastic job. So if word of mouth is very, very important, and you can have more and more overjoyed customers who are telling people about you, fantastic. You've got an assured success. Specific elements, do you have a passion and commitment? Are you saying, well, this thing may work and it may not? Probably not going to work that way because there's no commitment. You got to have that passion. You really want it. Remember in that lower right-hand corner of the business model canvas, that success, what is it that's driving you? If you've got a strong driving factor, you're going to stay in business. What's the customer is going to pay for? You have to deliver something they will pay for. You could say, hey, I love this product. I love this. It doesn't make any difference. When I was in business, I told our salespeople, what you are selling is totally irrelevant. What you think about the product is totally irrelevant. The only thing that's important is in the mind of the customer. Go find out what that customer wants and sell it to them. And in that case, it's not even a sale. They're going to demand that you give it to them and demand that you take their money because they have to have that solution. That's what you want. You have some vision and goals, but the big thing is, do you have the action plans to implement it? Not only do you know that, hey, I want to drive toward the goal line, but how am I going to get there? Is this going to be a short pass, an end run? What's my action plans to get there? You got to persist. I got to tell you, you'll find setbacks all the time. But if you stop at the first bump in the road, your business is dead. But you have to go over the first bump and the second bump and the third bump, and you have to hang in there and hang in there and hang in there. Make sure you deliver on all promises. If you promised it on tomorrow morning, make sure that that's there, because if it's not there, the customer is going to tell everybody, these people are not reliable. They told me yesterday morning and they didn't get it until 3 days later. They're a bunch of bums. So deliver on every promise. Comply with the legal requirements. We all know that. And there's a willingness to start the business. Let me tell you a quick story. When I was looking at starting a business, I did all the research, things that you all are doing right now, getting a lot of data. I had a whole wall full of information. I was afraid to jump off the cliff. And I used an excuse, well, hey, I'm working full time. Turns out that our son, who was working in an office for a construction company, the construction company reorganized and cut out a division. So he's without a job. So I told him, I said, you got a choice. You can either go work for somebody and get a regular paycheck, work 40 hours and get a regular weekly paycheck, or we can start this business and you may or may not get a paycheck, depending upon how things go. He was living at home at the time, so it wasn't that big a deal. But we started the business, and he became the major part. And as it built, we built it up to about 30 employees and a couple million in annual sales. We turned the businesses over to him, and he became the owner, and he is still the owner, and he's growing the businesses, doing very, very well. So you have to make that jump to actually get that done. The ultimate test, timing. Turns out that there's a story, a CEO of something called Ideo, a company in the West Coast. He said, what are the success factors? And he had actual experience. And he says, it wasn't the idea, it wasn't the top team, it wasn't the funding, it was timing. So think about the business. If you're going to start a business or expand a business, take a look at timing. Is this the right time to do this? Because if it isn't, don't do it, because you're fighting uphill. But if it's the right time, Facebook, very successful. Why? Because people wanted to start communicating with each other, and he started out at the university level and then spread out. Google they weren't the first to do a search engine, but they found a very, very efficient methodology to do a search engine. And timing, people were searching more and more. They said, here's the most efficient, they jumped on it. Amazon started out selling books. Why? Because you had all these little bookstores all over, but they had a very small number of books relative to the total available. Timing says, I want my book, and I want it now. So where do I get it? Provided it. With that success, he got into other things and broadened and broadened and broadened. So timing is very, very critical. Sure, you've got adequate capital. Startup, remember we talked about that sheet in terms of the efforts, what it takes to start up. And then you need to figure out, after you get started, what are my growth? Am I going to grow? Because if you have to have that funding to grow. And once you get started, you can find, and successful and profitable, you can find a lot of alternatives, whether it's banks or private equity or whatever, to get additional money for growth. But two separate areas. Avoid the high attrition. I mentioned the 80-90% of businesses that fail in 5 years. The way to do that is to go talk to your SBDC counselor, your SCORE mentor, or any of the others. And I'm going to talk a little bit later about some of the places you can go. Go talk to them, because they've been there, done that. They've got a lot of bruises all over themselves from things. Learn from them. But the big thing is you have to be able to go for it. You can't just say, I think maybe sometime. You got to dive in. Quick story. 5 frogs sitting on a log. 3 frogs decided to jump off. How many frogs are left? Let's see, 5 minutes. It must be 2. Actually, there's 5, because 3 decided to jump off, but they didn't jump off. They just decided. So if you decide to start a business, but don't jump off that log, you're going to still be on that log in the future. So you have to eventually jump off the log into the deep end, but be sure you're prepared. So we're going to jump into any questions at this point that you may have, and turn it back over. If you have any questions, dump them into the Q&As, and we'll be happy to stay here as long as necessary to answer any question on the material presented or any other questions that you can think of a business nature.
Perfect, Vic. Hi, I'm checking the Q&A, nothing in it quite yet.
Okay. Well, while they're doing that, thinking about it, here are some of the resource partners. Not only is there SCORE, that organization that I'm a part of, but there's West Women's Business Center program throughout the state. And not only do they do it for women, but also for men now. Super program. If you're a veteran, make sure you talk to VBOC. This is a Veterans Business Outreach Center. Rich Koffel, I know him, does a super job and his people in training vets. I've been a part of that program as well. And lovely program for vets. So there's a lot of places you can go. Remember your SBDC counselors throughout the state as well. They do a super job. Talk to people. Don't go alone. And because all of these people are there and are dedicated to the success of your business. They want you to succeed, just like you want to succeed. So don't hesitate. I'll turn it back over now if there's anything that I should be added that I might have missed. And
you want me to give the first question?
Yeah, please.
What is the new name for the CRS ID?
It's the New Mexico Tax New Mexico business, BTIN, business tax identification number. Business tax identification number is the replacement for the CRS.
And then there's a question about what's the email address, but I go to it almost every day, so I'll just chat it over.
Go ahead, please.
It's tap.state.nm.us.
Right.
Yeah, you won't forget it once you register, will you?
Oh boy, they won't let you. They won't let you. They're very much dedicated to getting their money.
Okay, that concludes the chat for now.
Okay, biggest mistake I've seen some people make is they collect that tax and they use it for their own purposes and don't remit it. That's a very, very, very bad mistake, because they will come after you and they're vicious because it's their money and they're not about to let any of that go. So a lot of businesses here in town have been shut down because they didn't pay their gross receipts tax. So make sure you comply right from the get-go and you'll be okay. With that, it's a pleasure to have talked to everybody. And as you come up with questions, don't hesitate to get a hold of your counselor, mentor, and ask the questions, because as I said before, we're here for the success of your business. Thank you.
Thank you, Vic, and thank you all for attending. If you don't have anything for me, Vic, I'll end the webinar for everybody.
Please, thanks for monitoring everything.
No problem. See you soon. Bye-bye.
Take care.